Hedge, bringing you a strategy of the day update here. Going to cover corn and beans and new crop. Touch a little bit on the spreads, but generally just give us an update of, I think, where we are right now going into today's close and a pre-strategy of the week kind of update here for us. So overall on the day, pretty negative price action. Doesn't matter where you look, certainly with the exception of some of the meats. Our row crops are definitely lower here. The only thing up in the whole complex that I can really see is soy meal, only up slightly on the day and really coming down and having faded off of highs of the day. So even the strongest thing that's been holding up the strongest over the last 24 hours is almost unchanged and looking to be a doji. That 18-day moving average closing below that there around 414 could be cite some bearishness. The December bean oil breaking massive outside day to the downside, probably in a response to actual crude breaking down. Also, beginning today with November beans, $13.95.5 last, down 27 cents of the day going into the settlement here. That has put us into oversold territory there on the daily stochastic RSI. We are below every single major moving average that we typically track. Failed to break above that 100-day moving average up around 1457 there the last week of testing that we had. Came back down to test the 18-day, broke below it. Have basically held that 18-day as resistance here at 1427 here today. And that pushed us back below the 55-day and 200-day moving averages, which come in around 1408 for the 200-day, and I'd say 1413 there for that 55-day. So beans breaking below what could be a little bit of a trend line here and some kind of broader range we've been in. Let's break down the smaller time frame chart and we can. Okay, so November beans on the 4-hour chart, we've been tracking a sideways range ever since the end of July and into the start of August. We had this double 61.8 line break, a full 50% short off the highs. 61.8 lines broke there at 1471 when we rallied all the way in that short covering rally back to the high of 1489. Came all the way back down to 1365, the 61.8 line to the downside there of the pull from 1288 to highs. That double break started us drawing up all these other trend lines to dictate a range or some kind of sideways price action going on. We've left an open gap at 1350 below us, back from the end of July there, and an open gap up at 1534 above us that's been open since the end of June. So we're between those two levels, a fight over the trends happening, and right in the middle of this range is 1420 to 1440, where the market has just been kind of responding back into. We are now below the upward sloping trend lines that we've held since August and July, respectively, against the lows in soybeans. Those levels broke down here actually yesterday, is where those major trend lines kind of broke. Well, they held into yesterday's close, I should say, and then last night in the overnight session, we broke below those levels. Selling accelerated today after the open, where we rallied back to test that broken trend line around 1420 as resistance, and we then sold off the rest of the day here, well, into the end of the day, I should say, the last 4 hours since the open, and making our way to lows that we were holding there into the end of August, that last week of August, where we caught that rally, which ultimately failed to break out of the 1480 threshold, that cluster of highs now we have in the high end of the range. So this chart, now that we've come back down to and through the recent range, when we step all the way back through June, there's no reason we couldn't retest 1360 or the 1320 to $13 level. I mean, those are both low ends of the range that we've been to multiple times before. And I think today's price action is concerning enough to consider that we may be back there testing them sometime soon too. We'll see how we close today and how we open up tonight, but it'll be an interesting dynamic there. Okay, December corn. And later today in the Strategy of the Week webinar, we'll take a look at the dynamic that's playing out in old crop, new crop. That's September, December corn, September, November bean, and the wild spread price action that's happened in both of those. Corn's a lot tamer right now. We're talking swings of only about 10 cents, but the beans, over $1 swing there from the contract high in that September Nov bean. Also maybe a canary in a coal mine that inverted markets are over and maybe being threatened. And certainly the September-December corn spread today going a half a penny under or quarter penny under right now, with lows of the day at a penny and a quarter under, going back, out of inverted markets and back towards contango or normal markets. Wiping out that backwardation is a big deal, and is a fundamental dynamic that is at play where commercial interests and bigger players might be trading it. All right, but December corn today trading at 658.5. That's down 12.25 cents on the day. 3 days down, lower lows and lower highs now, failing to break above that 100-day moving average there at 683. And when we look at the smaller time frame here, chart, the 4-hour chart, you'll see a big 50% retracement into 680. The 50% was at 663, I believe, or 664, but we failed to break above that 618 line. We were in overbought conditions for the entire month of August, with the exception of about 4 days, and now have unwound overbought conditions down to a daily RSI of 0.4. That's a massive momentum breaking signal to me that this trend may have run out of steam. When we look below us, we still have the 200-day moving average at 643 that we could get down to test. The 18-day moving average is at 643 as well. So why can't corn test another almost 20 cents lower just to test the big supportive technical area that we can very visibly see on this chart? And of course, the 55-day even below those at 633. So let's break down that small 4-hour chart, or the smaller time frame here real quickly for December corn. Upward sloping trend lines, from the last last month, because this is from the July 25th low, intersect right with that open gap around 630 at this time. Next in the series, 50% longs to the upside, give the bulls their full trend analysis, because we are still in an uptrend since that threshold, but the momentum break that we've seen today could be threatening this trend, is I guess what we're getting at. The next in the series, 50% long. So the first was from that original 562 low to the 642 high, pulled 50% back to that $6 level. Upward targets of 661 and 691 if it extended were fulfilled. So now from that old entry low at around 603 to the new high that we just formed up there at 683, a 50% pullback of that swing is at 643. So interesting to see that fib align with the 200-day and the 18-day moving average. Very visible level. I think it gets tested, and those really visible levels I always feel are at threatened, or most highly threatened to break or get run, because a lot of stops are going to exist there. That full 50% level from the contract highs of 766.25 down to the lows of July at 560, 561. That came in at 663, 664. We traded up into that threshold. We closed the open gap at 673 as well, so we could finally remove that from our charts. But we did, whoops. There we go. But we did trade up into that inflection zone, which I kind of, that was that gray box that's been on this chart. What is going on with my mouse today? There we go. That was that 50 to 61.8 area, and also this, this old high here at 659 here from the start of July. Anyway, we got up there to fill that. What I saw was an open gap on the chart. We still have one more open gap above us at 730.5 on the December corn. It's a long ways up. My line in the sand here coming in today was at 660. We broke below that level. Closing down at the level we are certainly hasn't broken, the old swing low here at around 650. But if beans are getting as heavy as they are, or could, there's a justifiable reason why corn might be finding some kind of top. And there's some big levels down below us that the market might want to have some reversion to the mean, to get back to test here in the near term. So being on the lookout for that. So join me here in 40 minutes. We'll be starting the Strategy of the Week webinar. We'll be taking a look at some of, I think, the spread markets that have been more, trending more and been more of a dynamic trade than our outright futures have over the last couple months, and what they could be signaling here going forward for a for maybe a period of trending that, or a period of onslaught that the beans and the corn might be setting up for. So have a good one, everybody, and we'll be back with you as price action develops. Remember, we can always be reached over here at Zaner at 312-277-0110. You can find me on Twitter, Facebook, or shoot me an email at dhussey@zaner.com.